Hello, welcome back to Phil's SMSF podcast. I'm your host. My name's Phil. Now, today's episode will show you and discuss with you on how to prepare documents and present documents to your accountant in order to prepare the set of annual financial accounts, which includes an audit report. Now, you can prepare the annual set of accounts on your own by yourself if you do, provided that you do have some proper software that enables you to get the market valuations of your investments and to enable you to prepare bank statement transactions and reconcile your bank accounts and your loan accounts. If that's the way you want to go about it, that's fine. You can do that on your own. However, the types of documents that you require and the types of source evidence that you require in your SMSF, the very first document is the SMSF Trusteed. Now, that's very important for you to have and for you to keep on you all the time as part of your permanent records because a trusteed, it describes the super fund and it shows who the beneficial owners are, who the beneficiaries or the members of the fund are, and it also points out the provisions of your trusteed and what it allows you to do in your SMSF. And also, if you have set up a trustee company, you'll need to keep those records of the trustee company, all of the ASIC records. So, for example, the certificate of registration and the minutes of meetings and the share certificates and so on of your trustee company. Because that'll have the names of the director or directors of the trustee company, and that needs to be established also in preparing your set of accounts. If you have a property investment with a loan, you will need to also have a copy of the Custodian Trust or the Bare Trust Deed. And that needs to be stamped, or at least it requires a certificate of stamping or a certificate of duty that's provided by agents of the State Revenue Office. Now, that certificate of duty just tells you that the $200 duty has been paid and that the trust deed, the Custodian Trust Deed, is valid for that purpose. Now, the other thing why we need a custodian trust deed is because of the loan that's on your property, especially if it's a related party loan. We need to see the limited recourse borrowing arrangement that the SMSF have with its related party, the term of the loan, the amount of the loan, and the lender's name and details and so on, and the property details also. And the company trustee of that Bare Trust is also required as a permanent file. So please do not lose these documents. They are very, very important. They are perhaps the most important documents in the SMSF. Now, the other set of documents required in the SMSF in order to, first of all, start preparing the financial statements or the accounts by means of preparing the bank statement transactions, you will need the actual bank statements. So you may have one bank statement or multiple bank statements. You will need all of these bank statements and you will need to be able to remember the transactions that you've made in your SMSF from July last year, for example, to June this year. Now, what I recommend and advise is that you keep a short summary a short summary as and when you have made a transaction in your SMSF. So let's say, for example, you've received a contribution from your employer in your super fund and it's been deposited into your bank account. You'll just need to make a short note somewhere on your PC, on paper, that particular date, the amount of the deposit, and just state that it was a contribution from your employer for the previous quarter. If you've made a tax office payment, Obviously, the bank statement transaction will just say tax office payments. You will just need to state this payment is, say, for example, the last quarter of the income tax installment, for example. Or if your super fund's registered for GST, you may like to divide that amount and say this component is a GST component and this component is the income tax installment. So that's basically how you can you can prepare a short notes on transactions as and when you make them, so that it'll be a lot easier for you and for your accountant when you send it to them, so they know what to do and what to allocate. So bank statements along with transaction explanations are very important. And it's also vital that you reconcile your bank account. So whatever amount is in the balance sheet at the end of the financial year must correspond and match with your bank account. Unless, obviously, you've drawn a check on like the 29th or 30th of June and it's cleared sometime in July. You'll need to do a manual reconciliation and say this check was drawn on this date for this expense. Yes, you can claim an expense. However, you need to manually reconcile your account and say the bank account is short of balance of that amount because of the check that has not yet cleared. And that's fine. It's a manual reconciliation. Now, if you have investments in shares or managed funds, and you have a broker, your broker will send you a statement each year shortly after the end of the financial year. And that statement will provide for you details of your investments. So it will have your shares at market value and the balance of your cash account at 30th of June. It'll also show any unrealized gains or losses that have resulted during the year, and any realized gains or losses as a result of your share trading. And it'll also show what income you received and any ongoing expenses that have been incurred. Likewise, if you have a share trading account with one of the banks, for example, you can automatically download the report by logging in to your online banking and to your share trading online, and you can generate these reports and have them with you, or you send them to your accountant. They'll look at the report because the report will state how much income you received from these shares, how much perhaps interest you receive from your cash account, what your cash account balance is, and what the shares value are at market value at 30th of June. So market value of shares is very, very important to take into account, because you do need to account for that each and every year as at 30th of June. Now, if you have online software, for example, BGL Simple Fund, it's a very, very good software package. It automatically picks up market values of Australian shares and overseas shares. And when you haven't yet sold your shares, it will have the market value and the chain and the movements as well. And when you sell your shares, it'll provide the most tax effective method of working out the capital gains. So these are things that you need to really bear in mind when you do have investments in shares and managed funds. Now, if you have investment in property, whether it's residential property or commercial property, which means even car park space or storage units, you will typically have a statement from your agent every year, shortly after the end of the financial year, showing the gross rental income and all the expenses that the agent has paid on your behalf. That you will need to reconcile your rent income and your expenses all back to the agent statement. So obviously your SMSF may have been paying outgoings on the property or your investment without the agent paying for these things. So they're extra expenses that your SMSF has paid, but you still need to be able to produce source documents and evidence that these expenses have been paid. Now, if you have a tax depreciation report, you also need to have that with you, or if you're engaging an accountant to do to prepare your annual report, that tax depreciation report will clearly show the address of the property, and the report will also outline each and every year what depreciation can be claimed and what capital works deductions can be claimed. That's a very important document that you need to have if you have engaged a quantity surveyor to provide you with that. That needs to be kept forever. That needs to be kept for indefinite period. Now, the other thing that needs to be kept and maintained properly are any rollover statements from other superannuation funds. So if your superannuation fund, if you've rolled over your benefits from another superannuation fund throughout the year, the superannuation fund will provide you with a benefit statement and with a rollover, with the details of what amounts have been rolled over into your super fund, and the taxable components and the tax-free components. So these need to be kept and kept very handy, and also provided to your accountant in order to reconcile those reports. Any pensions, if you've made any pension payments to a member or members in your SMSF, you need to clearly state on a bank statement transaction. So let's say sometime in October, on the bank account statement, it says withdrawal or transfer to NetBank $10,000. Now, you know that $10,000 was a pension payment. So you can just write a short explanation: pension payment for member A or pension payment members A and B, and so on. Because we need to reconcile back to the minimum pensions that you need to withdraw from your super. Because if you do not withdraw minimum pensions from your super, then your super fund's going to be in a little bit of trouble. It will basically lose its pension status and go back into accumulation mode, which means it'll be taxed all at 15%. So that's the only thing that you're going to lose. You'll lose a pension status of your fund, which can be quite costly tax-wise. Okay, now again, if you have an investment in property and you have a loan on your property, you will be given loan statements. Now, the loan statement, whether it's a related party who's providing you the loan, or whether it's an external lender, you need to be able to access loan statements, and you need to be able to reconcile the total interest paid during the financial year, and you need to also reconcile back the balance on a loan account in the balance sheet back to the loan statement itself. So everything needs to be absolutely 100% reconciled, maybe with the exception of a check withdrawn at the end of June and has not yet been cleared, but everything else needs to be properly reconciled. Again, if you have a property, whether it's residential or commercial property, you need a market valuation on it. Now, that can be every couple of years. You'll just engage a real estate agent or a registered valuer to provide you with a report on the valuation of the property. Now, they will usually provide you a report and value the property from a low range to a high range. Now, it's entirely up to the accountant what they want to value the property as, but usually they'll take a middle range. They'll take an average between the high and the low range, and then they'll put that as a market value of the investment property. So you can see how absolutely vital it is to reconcile all of your investments, all of your accounts, all of your income, your expenses. It's absolutely vital that it's all in proper order and reconciled. Now, please bear in mind, if you do not have sufficient records, if you do not have sufficient documents, The accountant that prepares the reports for you may get in touch with the SMSF auditor and will outline their various concerns that there's not sufficient records available. But in this case, in this instance, it's up to you as a trustee of the super fund to provide records and evidence and documents when required, because your auditor at the end of the day will provide an audit report and will prepare an audit report on the basis that they have cited the information and the documents, and on the basis that their financial statements present fairly in accordance with the accounting policies as noted in the notes to the financial statements. Now, the audit report consists of two parts. One is part A, which is the financial report. So the financial report part is based on figures that have been presented in the financial statements. Part B is a compliance report, or the compliance section. And what you need of the audit report is that for the auditor's opinion, each trustee of the superannuation fund has complied in all material respects with the applicable provisions of the SIS Act and the superannuation regulations for the year ended 30th of June. And that's on the basis that you have complied with all the proper documents and you have complied by not transferring any money out of the super fund for your own personal purposes without any approval or compassionate grounds set out by the ATO. Now, if you have by mistake let's say made a payment to your ATO business account out of your super fund, you can notify the accountant and the SMSF auditor that you've done this. You've paid, let's say you've paid $10,000 out of your SMSF account towards the ATO debt of your own business. Now, generally speaking, that is not okay. That gives rise to the in-house assets rule, and that will be constituted as an in-house asset. Now, provided that this is below 5% of your fund's total assets, that is okay. But the auditor will still need to report it in the audit report, and will need to state the amount of the money that's been transferred, but will say that this represents less than 5% of the fund's total assets. Now, it's up to the auditor to use their professional judgment whether they will report that in a auditor's contravention report. However, if these transactions and the nature are very serious and it's repeated over and over again, then the auditor will lodge a auditor's contravention report and say that, look, the trustee has transferred money from the super fund for their personal purpose, and you know that it's not the right thing to do. But if you continue to do so, it's at your own risk and peril, because then what may happen is you'll get what we call a qualified opinion of the compliance section of the audit report, which is not a good opinion at all. And the auditor will state what issues there are, and perhaps will state that in the contravention report, and perhaps the tax office may investigate, and depending on the seriousness of the circumstance, you may lose your status as a trustee of an SMSF. You may not be able to be a trustee any longer. So that's a serious issues of what we're dealing with if you are going to, try and be naughty or get around things where you're not supposed to. So please bear in mind, you need to be complying, and your SMSF needs to be compliant in order to continue maintaining its tax concessions. Because once the ATO issues an SMSF with a notice of non-compliance, your SMSF will then be taxed at 45%, and you don't want that to happen, especially if you have significant assets and profits your super fund will be taxed at 45%, and that's a lot of money. So please be wary of doing anything that's against the superannuation laws. They're known to come quite hard onto trustees of self-managed super funds. Now, on a final note, how long do source documents need to be kept for? Well, according to the laws and regulations, it's 10 years. However, if your SMSF is not 10 years old, still from the date that your SMSF was established up to now, proper records need to be kept. Now, whether you keep them on paper or electronic, there's no recommendation as to how you need to keep your records, but at the end of the day, you need to keep your records properly. And records such as trust deeds may perhaps need to be kept for indefinite periods because a trust deed is that document that establishes the existence of the SMSF, so that will need to be filed as a permanent paper. Now, in the next episode, we'll show you how to complete the SMSF annual return and what to look out for when putting some of these relevant figures in there. So stay tuned for the next episode.